Hey, okay, so this is Wendy Lane-Borland with the Wendy Home Group at Skyline Properties. I am with Joe Hoffman, who is a loan officer extraordinaire and branch manager for Mortgage One Northwest. His office is in Centralia, but he also has access to office in Olympia. So we were talking off camera about rates. And so being in the real estate industry, a lot of potential clients bring up interest rates to me all the time. I am definitely not a professional. I'm not in your shoes. I don't have access to that information. But what I find is, so if I have a potential buyer coming to me and they're curious about what they qualify for, they are used to the mentality of walking into a retail lending situation and kind of giving over their information and being told, hey, here's your rate, maybe like a one solid, one and done, here's your rate, close the book, and they feel like that's where they are. But you're here to say that that's not necessarily true.
That's not the case. They can give their recommendations, but yes. So if you walk into a retail lender, your bank, a credit union, something like that, they're going to have one set of rates, and they're gonna tell you what they think you qualify for today. So someone like myself who's a broker, I don't have one set of rates. I have many, so I can use any bank I want to use or any nationwide lender I want to use. So I have access to everybody's rate sheets. So that's where the biggest difference between a broker and a retail chain is. I have access to way more products and can shop on your client's behalf. So they're looking for the best deal possible, and so am I. So sitting with me would be like sitting with many, many different banks and saying, what's your rate?
Awesome. Okay, so you come back and we have this, basically, I'll use the word par rate. Our viewers may not know what I'm talking about, but just kind of their base rate where someone qualifies. And they want to get a better rate at that point. They're like, oh man, that rate number is kind of high for me. What's an option?
So you mentioned par rate. So that is the right term. So par basically means it does not cost or credit anything. It is the level rate of the day. Rates do change daily, so that does change daily. But every borrower in any loan type has the option to do what's called a buy down or a discount. And that means spending a little bit of extra money to get a better rate. So that is different per lender, because I could have some lenders who are better at buy downs than others. So that would, it also works reverse. So you can spend money to get a little bit lower than par rate, or you can get credited back money to use toward your closing costs to get less closing costs. So it's really the lower you choose for a rate, the more your closing costs are going to be.
And when he says closing costs, he means closing costs for the loan. So nothing that's going to be on the title and escrow and other portion, but your closing costs a large part of your closing costs just in general are going to be your costs from your lender, especially if you're on the buy side. So
if you're buying the rate down, if you don't buy the rate down, there will be nothing from the lender. It'll all be title escrow fees. And you can do it, like I said, reverse, take a little bit higher of a rate than today's par, and now those title and escrow fees go away, because now your rate is paying for the rest of your closing costs. So a lot of people don't realize I've used it a few times to help somebody get into a house with nothing out of pocket.
Wow.
Rates go down, we can always refinance later.
Okay, so it's definitely worth it and important to get with Joe to talk about your situation, to figure out what would be best.
Go over the options. Because everybody has options. There's no one loan for everybody. It's everybody has options, and we just need to sit together to determine the best one for you.
It did make me think about really quick, if you're buying down a rate, so let's say that we have a par rate that someone for the day came in and like, here's where you qualify, where it's, to buy down, about how much does that cost? I think you talked about 1% of
Oh,
loan
you
cost?
get to choose.
Okay.
It's up to the buyer.
Mm-hmm.
So that would be something you'd want to sit with me and see the options, because every eighth in rate you change will add to the buy down amount.
Mm-hmm.
But commonly people do about a 1% buy down.
Okay.
Yes.
And that would take us down how much?
Different per lender.
Okay.
I have too many lenders, so if I was like a retail bank, I'd have that one sheet and I'd be able to tell you, but every lender prices their rates differently.
Mm-hmm.
So being with a broker is a huge advantage, because I'm going to be able to find the person, if you choose to buy down 1%, who's going to be better.
Okay.
Because you can have, I'm sorry, this might be something we want to edit out.
Yeah, okay. Let's go for it.
You can have a lender who has a better par rate
Mm-hmm.
versus another lender who has a better discounted rate.
Mm-hmm.
So obviously, if we choose to do a discount, that's going to determine which lender I use, because I always want people to get the best pricing.
Mm-hmm. Okay, so how it's going to be, how much they're going to pay to get that discounted, those discount points to get that lower rate. Yeah, we'll have to.
Yeah, so 1% buy down at one lender could get them more of a benefit than another.
Perfect. Yes,
Yeah.
that's a way better
Yep.
way of saying that. Just bungled. So,
Yep.
okay, cool. Well, I mean, that's just really good to know. We see in this market, people talk about different types of buy down packages. I mean, this isn't anywhere near what we're talking about, a buy down package of like a 2-1, 3-2-1 buy down, things like that. That is not what we're talking about. We are talking about buying down the rate over the life of the loan.
Life of the loan.
Yeah,
yes.
so it's not anything where there's going to be it's adjustable or anything's changing in the future unless you refinance.
Yeah.
So to get to a better place. Okay, cool. Well, thank you for answering those questions. In case this doesn't end up being a standalone, how can people get in touch with you?
Yeah. I would say initial contact, probably my cell phone would be the best. Nights, weekends, and any weekday, 360-878-7080. And set up an appointment to meet up in person.
Yeah.
Yeah.
Get it going. Okay. Thanks, Joe.
Thank you.